Hey, what's up traders, welcome back to Failure to Displace. So it's been a little bit of time since my last upload and I apologise for the radio silence, but I'm back and ready to start sharing the next chapter of my trading journey with you. So this is going to be a slightly different style of video where you can actually see who I am. So hey, my name's Seb, I'm the trader behind the actual channel. Over the past few months there's been some pretty significant changes in my trading approach. I've been transitioning away from trading Forex CFDs with my personal funds to trading index futures through prop firms. So why was there so much silence during this transition? I wasn't ready to share anything with you until I felt confident that I could show some success in my new strategies. So now, after a few months of trading futures and securing two 50k funded accounts through Apex Trading, I'm excited to explain why I made the switch and how hopefully this move will take my trading career to the next level and hopefully help some of you guys out as well. Let's jump into the meat of the video and take a look at the 5 reasons why I switched to trading futures and why you might want to do so as well. The first point that I'm going to come to is no spreads. If you've ever traded Forex CFDs, then you'll know how annoying spreads can be. You've done your analysis, you're confident in your setup, and then suddenly the spread widens and wipes you out. And the worst part, the market never even reached your stop loss. It was just spread causing the loss. We've all been there. Imagine you're trading something like EURUSD during a high volatility event. Your stop loss is set 5 pips below support, and then suddenly the spread widens out of nowhere. You stopped out only to see price bounce back instantly and then hit your take profit. For me, that was one of the most frustrating experiences in trading. Even with the perfect analysis and execution, you still take an L, which can then totally derail your entire day. And then FOMO trading or revenge trading, it's so difficult to control. But with futures, there's no spreads. You trade at the exact market price, and the only cost is a small fixed commission. So this means no more starting in the red, trying to make back up the spread. No more guessing how wide the spread might get, and significantly much fewer unexpected losses. So for me, this alone has made my trades much cleaner, my results much more predictable, and my confidence much higher. Point number 2 is no B-booking. So this is a common issue with Forex CFD brokers. Essentially, when you place a trade, the broker often takes the opposite side of that trade. So when you lose, they actually win. Now, even if they're not outright manipulating the trades, there's clearly a conflict of interest there. Now, in futures, this doesn't exist. Trades are executed on a centralized exchange called the CME, and your broker's merely facilitating the trade. They're not actually betting against you. For me, this creates a much fairer environment where you can focus solely on your trading without worrying about any hidden agendas. And one additional thing to keep in mind is even when you're trading futures through a prop firm, you're generally using a simulated account, not a live account, but that source of price still feeds directly from the CME. So this means that everyone, all of us retail traders and institutions, we're all seeing the same price. So it's far more transparent and it eliminates many of the risks associated with kind of dubious broker practices. Point 3, we're going to be looking at the consistent pricing that we see and also volume data. So one of the biggest frustrations with Forex was inconsistent prices. With CFD brokers, they set their own prices because they're not traded on a centralized exchange. So this means that two traders using different brokers but trading the same instrument could see completely different prices. This makes backtesting unreliable and trading kind of unnecessarily complicated. So with so many unknown variables going on with all of the separate broker price feeds, it can be really tricky to have confidence in your setup. But with futures, the consistency is guaranteed. Everyone is getting the same price because the market's centralized. So whether you're using broker A, broker B, or broker C, or even a prop firm, the prices are all coming directly from the CME. So this consistency has made my analysis much cleaner, backtesting is much more reliable, and I'm trading with much more confidence. And also there's one more thing. Volume data. So unlike Forex CFDs, which only provide tick volume, futures offer real-time volume data. So since switching, I've now started incorporating volume delta with my ICT strategies. So volume delta is showing me the net difference between buying and selling pressure within a specific candle. And this has been instrumental in helping me identify which ICT setups are really ready to pop off. Now this might be complicated and I will dive into how I'm using volume delta in future videos, so do make sure that you're subscribed if you want to learn more about that. Point number 4 is now lower costs and legitimate futures prop firms. So let's talk about costs and access to capital. In the Forex world, prop firms were often really expensive and obviously had questionable reputations. Due to the ability of them to be able to set their own spreads and price levels, I never really trusted them enough to invest my own money, which is why I always stuck with trading my small personal funds until recently. Futures prop firms like Apex, they offer a much better deal. Their evaluation fees are much lower. The rules are pretty straightforward and pricing data is regulated, so we're all seeing the same prices. So watching trades by Matt Excel on his 20 Apex accounts just showed me how accessible and scalable these firms can be. And what sealed the deal with me is that, well, Apex frequently runs promotions where you can get a 50k evaluation account for as little as $20, so they often run 80 or 90% discounts. So you compare that with most Forex firms where you're paying around $400 for an evaluation, it's kind of a no-brainer. At $20 to $50 for an Apex eval, even if you're only using the account as a demo, you're getting live market experience. And that demo account or that eval is giving you live price data from the CME, which you would otherwise have to pay for in TradingView. There's minimal risk because you can only lose the monthly payment that you've signed up for. So currently, I've managed to secure two 50k funded accounts and I'm working on building them up to get my first payouts. Now I'll be honest, for some reason I'm really struggling with this step. Mentally I'm finding it really hard to stop dreaming about the crazy potential profits that are available to me, which means I'm really expending too much mental capital on each trade. So I'm kind of stuck in a rut right now, almost scared to trade. I've got both of my accounts up by about 1,000 in profit, and now I'll just keep second guessing my strategy in case I take a loss and then ruin the profit that I've already got. It's all really irrational and something that I really need to work through, which is one of the reasons why I'm now back with a plan to begin daily reviews again, because that habit previously really helped me kind of solidify my trading process when I launched the channel. So stay tuned for more updates on that. And then finally, let's discuss market structure. If you've ever traded Forex, you can know how chaotic it can feel. Between the spreads, inconsistent pricing, and potential broker manipulation, getting a clear picture of market dynamics, it can be pretty tough. In the futures market, the structure is far clearer and more predictable. For instance, in Forex, I'd often see price break a key level on my broker's chart only to snap back aggressively. I mean, I often saw comments in my previous videos where people were observing the same thing. Their charts look very different to mine. Now, sometimes the movement was genuine, but other times you felt like brokers may be manipulating the price or exaggerating the move. Well, in futures, when a level is breached, it's usually due to real market forces. So this clarity has made applying ICT concepts like liquidity grabs, fair value gaps, and market structure shifts much easier. And as I mentioned earlier, when you're coupling this with real-time buying and selling data using the volume profile, well, it makes taking the setups much better. The reliability of futures has just been a game changer. The setups are cleaner, the moves seem to make more sense, and it feels like I'm trading in a market designed for professionals. Much less manipulation. I'd love to hear from you in the comments. Are you trading Forex or are you trading futures right now? Have you considered making a switch? And what's your biggest frustration with currently trading? Let's discuss it. I really would love to hear your feedback. And if you found this video useful or helpful, then please hit the like button. And don't forget to subscribe for future videos and ring the bell notification so you don't miss any future uploads. In the next video, I'll be looking at diving a little bit deeper into how I'm using tools like the volume delta alongside ICT strategies. And that way, when you're watching my daily market reviews, you'll understand a little bit better what I'm looking for. So until then, keep crushing it. Thanks for watching, and I'll see you in the next video.